And as we noted, cryptocurrency history was made on Tuesday as the first Bitcoin futures ETF made its much anticipated debut on the New York Stock Exchange.
Yeah, this new ETF gives investors exposure to Bitcoin without owning it directly. Here to break all this down for us is Cheddar reporter Alex Vuocolo. Alex, great to see you. So help us understand why the launch of this ETF is causing such a stir in the crypto community.
Hey, Anna. Hey, Alicia. So early adopters of Bitcoin have been shooting for a Bitcoin ETF for at least 8 years, going back to when the Winklevoss twins submitted their first proposal to the SEC in 2013. Since then, multiple investment companies have thrown their hat into the ring, including Van Eck, Wisdom Tree, Valkyrie, ARK Invest, all of which are still waiting for approval. This ProShares fund is really the closest anyone has got, and while it's not exactly the Bitcoin ETF many were hoping for, it still serves the basic goal that many Bitcoins were aiming at, which is to drive mainstream adoption of Bitcoin by institutional investors. To put it another way, they see this ETF as a sort of crossover hit for Bitcoin, something that could become a popular financial product on both sides of the crypto fiat divide. So far, it's looking like they're getting what they want. I just saw the headline pop up that this fund has hit 1 billion assets under management in the fastest time ever for an ETF.
Alex, I got to ask, so how does the Bitcoin future ETF actually work for a lot of those who are interested in this, and what does it mean for investors?
So as you noted earlier, investors in the ProShares ETF do not directly own Bitcoin, which is a big part of the fund's appeal. Investors get exposure to Bitcoin's price action without having to navigate the unfamiliar worlds of crypto wallets and decentralized crypto exchanges, which can be kind of alienating for people that don't fully understand how they work. By the same token, the fund itself doesn't own any Bitcoin either. Because this is a futures fund, no one in this case actually has custody of Bitcoin. Instead, what the fund has are short-term futures contracts, which are traded on the Chicago Mercantile Exchange. And while this does expose investors to Bitcoin's price, I spoke to some experts who kind of pointed out that futures investors can sometimes lose out on the underlying assets price gains, which is why many of the proposed Bitcoin ETFs on the SEC's docket would be indexed directly to the price of Bitcoin. Despite these concerns, one regulatory expert I spoke to said other firms will likely push the envelope going forward, perhaps seeking approval for a futures funds with longer-term contracts or funds that are indexed to other cryptocurrencies.
So given the holdup for other proposals, why did the ProShares ETF move to the front of the line at the SEC? I have no doubt many people are wondering that.
Yeah, well, without knowing exactly what regulators were thinking, it's hard to say, but it does seem that ProShares' reputation as an established ETF provider did probably help its case. Historically, the SEC has favored brand name firms over small or unknown firms when it comes to approving new or novel financial products. It also helps that as far as futures products go, this one is relatively straightforward. It's limited to short-term contracts, and ProShares has made a lot of effort to provide plenty of disclosures to investors about Bitcoin's underlying volatility. At the same time, the SEC does seem to be more comfortable at this point with a futures fund as opposed to a fund that's directly linked to Bitcoin, because Bitcoin itself still lacks a sufficient amount of regulation in their view. So in many respects, the future of this Bitcoin ETFs and others like it depends quite a bit on how the SEC moves forward with its broader project of sort of bringing crypto into the regulatory perimeter.
Cheddar reporter Alex Vuocolo. Alex, thank you so much.